What's up everybody, Tom here with another video. In today's video, we're talking about the latest stock market news moving the markets right now. We'll also be talking about our technical analysis levels together for the S&P 500, Nasdaq, gold, silver, Bitcoin, US dollar and more to try to find out where the markets are moving next. This week's been all about, of course, the rise of the retail investors and Reddit against Wall Street. Gamestop, AMC, BlackBerry all moving heavily. But the question now becomes, after Robinhood has halted some trade, where does everyone move to next? Is it a commodity? Stay tuned. So as we like to do together, let's take a look at the heat map for the last 24 hours. And you'll notice straight away we've got Apple and we've got Tesla down relatively heavily for the day when compared to the recovery after that flash crash. This is because earnings came out, and while they were good, they didn't quite meet the lofty expectations of Wall Street, and they punished those stocks a little bit for that. If we take a look at the 1 week performance, you'll notice that only really Microsoft, Johnson & Johnson, and a few others are actually up for the week, because that flash crash that we saw 2 days ago is still really in the market. And there's actually a movement that happened from Wall Street that's very symptomatic of a continuation. Here it is. Basically, we know that retail investors such as you or I usually trade mostly in the morning. We've talked about this a lot on the channel. We saw an increase in the morning, followed by some stagnation and then selling into the back of the day. As I always mention on this channel, this close is the key. The close is the most important part of understanding what Wall Street's really doing, as that's when they place most of the trades for the day. And over here in this box is where the retail investors like you or me usually place the most amounts of trade. So we need to understand the close being the key. And when we have a look at that and then we break down sectors as well, it can help us get some extra information about what's happening with Wall Street and the stock market right now. Let's have a look at these sectors. So all the sectors were pretty much up yesterday, some up, not so much, and of course led by XLF and XLB and XLI over here with slight gains for the day, 1.86 being the best. But what I want to talk about is where it's been in earnings. We now know what, of course, Apple, Tesla, Facebook came out and did. That's led to some of the fall, but we also saw the FOMC, of course, coming out, and they had some things to say, and the market didn't quite like those. But I want to talk more about what's going on in the market right now and the seasonals that are happening. So firstly, what's going on in the market right now? Well, of course, it's all about GameStop. I think every single newspaper, every single website on the internet is talking about this phenomenon. And that is the retail investors basically rising up against short sellers and putting the short squeeze on. We're all aware of this right now. And of course, it's happening on GameStop, AMC, BlackBerry, and other stocks. But yesterday we saw Robinhood actually freeze the ability to trade this stock, and that led to a bit of a flash crash we'll be looking at later. This is, I think, pretty bad. I find it a very big double standard, and I'm sure many of you also find it a big double standard, that they're freezing the ability for people to trade these stocks when, in essence, if you look at Robinhood, or you look at, of course, bigger hedge funds, they're able to do realistically many things that they want to do whenever they want to do. So they've been squeezing stocks and doing things for years. Yet when the retail investor tries to do it, we get blocked. So this is, of course, going to be a problem to keep GameStop going. And that leads to Wall Street Bets and other places looking for other opportunities to, I guess, take advantage of this system and potentially really kick it back to the man. The question then, what is it going to be? Well, it looks like they're looking at silver, and we'll talk about that soon, but silver's definitely been moving in the last 24 hours, especially much bigger than gold. And that's because it is, in some ways, incredibly undervalued by ratios. And we'll talk about that more in our weekend video. So definitely subscribe if you're interested in that. We can see here, February is the declining month. We've already had some pretty euphoric moves from things like GameStop, AMC, and just stocks in general. And this usually is near the end of a bigger movement up, and then of course the beginning of a little bit of a correction. February, negative 8.4%. We've used this chart quite a few times here on the channel. But I want to bring it up again just to reiterate that February is usually a bad month. Now on top of that, if we take post-election years of February since 1950, you'll notice that they are generally down. In fact, they are averaged down more than anything else. They're also ranked as some of the worst months of the year in terms of returns. Now you'll notice here that the Nasdaq in particular takes a big beating. So in terms of which one's going to decline the most, it would most likely be the Nasdaq based on these statistics. We also have other things going on right now. We've got Schiller PE hitting 34.92, a very high number here for the Schiller. And this points again to some overvalued stocks in the market. Now, the question is, are they okay to be overvalued because they're tech? Well, I think they're okay to be overvalued to a point, but when you're talking about the standard PE ratios and everything, we're starting to get very high regardless of any time throughout history. And during recessions, we always see high PEs, just like here during the GFC, but this is becoming a little bit worrying, and I think it's due for that correction that we'll most likely see through Feb into March. What about what's going on in the markets right now, though? Let's take a look at the technical analysis here. Well, we've got the dollar index, and we can see we've got the daily open here. The daily was moving upwards to that 91, and we still maintain that the 91 is a key critical break level for the dollar index for dollar index bulls. If the dollar index can get through 91, that will mean it's gotten past 2 points of resistance plus kind of a lot of this structure over here, and it will push higher towards that 92. The other thing is, I'm sure you're seeing it, and I'm sure you have seen it. If you take a look at some currencies out there, US dollar, Swiss comes to mind, and of course dollar index, you'll notice that this is actually part of a bigger pattern. And that pattern is an inverse head and shoulders. We've got the head here, the left shoulder and the right shoulder. And of course, we've got the correct amount of coiling in the right shoulder as it pushes through these moving averages, the 20 and the 50 moving average. If that was to break, what distance does it go? It goes this distance towards the bull side, but I do think it'll have some problems at 92. So remember, if the dollar is able to get past 91, that could lead for a few weeks of incredible dollar movement. And that usually means that the market would also be declining, because when we see strong US dollar, we usually see weakness in the stock market across the board. For the bear side, anything under 90 is going to really trigger further selling back down to the 89. And that's the bigger picture we have here on the dollar index. If we take a look at things like put call ratios as well, here we've got the put call ratios, bring them back. We know that anything under this kind of 0.6 or around 0.6 area has always been a strong kind of notable area around key seasonals that tells us that the market is definitely too euphoric. Puts did rise after that crash, the flash crash that happened, but they're still in the middle zone. So there's a lot of room here for, of course, more puts to be opened and therefore even more calls to be opened. And we know that if the put call ratio is lower, that usually points to more likelihood that Wall Street will actually attack the downside and they'll actually attack the correction of the markets. Volatility index, or VIX, has really spiked out heavily. Here we've got it on the daily. So it got from that 21.2, 21 kind of area all the way up to 37 incredibly quickly. And now it's trading within a range and it went down to about 30. Now, as we said last time, anything above 27 was really starting to spike that kind of flash crash scenario. But if we get a VIX, imagine if we got a VIX here above 40 again. Now that would be phenomenal in terms of big correction coming. At this stage, VIX being this high just points to really big kind of ranges on the stock market and big daily moves. So have a look at silver. So as I mentioned before, it looks like Reddit, Wall Street Bets, other people, retail investors are starting to make some plays and some moves on silver. It's going to be pretty difficult for them to move it up themselves. But if they can, of course, that would be cool. And we are pretty bullish here on silver over the longer term. Let's take a look at what happened yesterday. So we got here the daily break close above the key resistance points. And I think that's a very important level. It got above that 25.80-26 zone and broke it pretty strongly. If we think then what's going to happen next, well, we may see a decline into this zone. But what's going to happen here is most likely the key resistance will become support. We'll have a 20 moving average kind of hitting it at the same point. And then we should see further bounce up here in silver. Let's take a look at the 4 hour now together just to get a bit more of an idea of that. You can see here the resistances. It's already tried to come down a few times and then it's been found by buying pressure. Also note all of these wicks. We've got 1 wick, 2 wicks, 3 wicks, all rejection selling wicks. If the market then breaks through these wicks, as we know, that means that it's taking out all of those short sells and basically is putting, in many ways, the squeeze on them. And then the market usually has a tendency to move quite strongly up. So if we're able to continue pushing this silver commodity up, this really is going to put the pressure on. And I think that these wicks are something to look at here from the buy side. But silver is very undervalued when you look at it over time. Have a look at this monthly. Go and have a look at gold silver ratios and all these types of things. We can see here it got up to about 48. It's been very high in the past as well. If we could go back all the way through history on monthlies, look here in the 80s, it got to 50, it got to the 50 again. And this is really that target that I guess a lot of people will be looking for, but it's very undervalued and very manipulated by Wall Street and other big bankers around the world. So silver's worthwhile watching. A pullback back down to that 26 will be interesting to see how it interacts. And of course, movements up here, hopefully to the 28. And if it gets past the 28, back to that 30 zone, and then maybe even towards the 40 plus. Gold trading differently. So gold doesn't have the support right now of the retail investors. And you can see the difference here. Gold actually underperforming 1841, while silver is actually doing quite well. It did get to 1860, quickly rejected that level in the 4 hour here, and it's kind of hovering in the zone. I think that makes it very, very difficult. We know we've got this strong support here at around 1834. Anything that breaks lower than that is going to trigger some heavy selling, I would say, some heavy flash selling. But this is the buy zone right now. 1834 has been bought quite a few times around that area. And anything that gets above 1860 should hopefully finally trigger that 1900 zone. So gold's still stuck in the zone, stuck in the range. Not really too worth looking at right now unless you're looking at those key levels. So we'll go back over to Bitcoin, and that's something that we've been talking about. It's still stuck in its range. We've traded as low as that 29,100, which previously was bought up. It was bought again with some nice weak rejections here with strong buying pressure. And we've got that previous resistance of the bodies here on the 4 hour around 34,500 that it's kind of hitting at the moment and struggling around. We do still expect that this most likely will trade in a range coming into Lunar New Year, again 12th of February, and then most likely the spike up after that will be the big thing that happens. That will probably be where we start to see the next move for Bitcoin. It's been historically pretty accurate, and we've been pretty consistent with the way that we've approached this for now. Stuck in the range, and until we get out of this channeling range, we don't know where it's going to go. But I would basically say once we get a touch to this side and maybe a bit of a rejection, if that does happen, we're stuck in a fully fledged channel. We can put our supports down here, put our resistances up here, wait for the break, and then of course we all know what to do with the channel. We'd take the distance of the range and then extrapolate that out if it was to break this area. So that will be the next interesting trade, and look how it points towards that 40,000 level for Bitcoin. Very interesting times and a very interesting level. So we'll quickly talk about Gamestop here. You can see what's been happening with it. This is the daily. So the daily went out of control. We obviously got well higher than $400. And then yesterday we had that news come in where Robinhood started blocking trades, and you can see the power of what that did. It really pushed the stock very heavily down in a massive shorting opportunity, and then it's moved well up. And I think after markets, it's trading about $342 again after they allowed some limited trade. So this stock is in basically an incredibly risky time. I would say this is as close as you can get to pure gambling right now. I understand the mention or the reason behind it, but look, fundamentally, we know GameStop's not really worth this much. It is a war between retail investors and, of course, Wall Street. And if they are blocking us and limiting our trades, it will end up punishing us. So just be very careful when looking at these types of things. Obviously, I think of that as a very big gamble at these points. Down here, maybe there was more to it. Up here, very large gambles, but big percentages per day. Let's talk about the broader market, S&P 500. What's going on? Well, we've had our trend line in for a while, but check out what happened yesterday. Some incredibly interesting moves. And I'll move over to the SPX here, which you should always be doing whenever you're doing your analysis as much as possible. Here we've got our trend line. Here we've got our 20 exponential moving average. A clear close below that zone. Very significant. And in fact, the first close that we've had since that November bull run up, since November 2. What happens next? Well, yesterday, look at the close here, guys. Check this out. underneath the 20 exponential was the close. That's pretty bearish actually. And that's the type of thing that Wall Street will do. Nice recovery, sells off. We're underneath that bullish hammer now. We're underneath the 20. You would think this causes further sell-off potential, considering also we're at that February point. We're at the point now where we already expect a correction month, being the February area. Let's go down to the 4-hour and see how things are interacting. Again, that big bullish candle followed by bearish pressure. Let's take a look at the 1 hour. This is more like it. This is more like what you usually see on these time frames. We have the bullish pressure coming back up. It hits our 20 and our 50 exponential moving average and starts to sell off. We should see sustained selling into the weekend. If we do, then that could be the sign of bigger things to come. Remember, there could be a risk-off attitude going into the weekends, and if Wall Street did want it, this is the type of thing they would be doing. They'd be pushing it underneath the 20, they'd be making all the technicals, they'd be getting the close through, and then they'd be looking for the correction. The question is, where does the correction go to if it continues? Well, it's pretty easy to do these correction kind of calls because you always look at the last big run up, you take a Fibonacci, and then you work out your 38.2 to 50 fib level. This is generally where a correction would go to. The reason why is this is a very standard correction kind of move. And also look at this, previous resistances all over here. So does this make a lot of sense? I think so. And we'll leave this on the chart. And then what I'll do is I'll go to the weekly here. And you'll notice, check out this. Now look at these lines. What does this start to line up with? The 20 exponential moving average on the weekly. And we have mentioned this on so many times on the channel. Sometimes you'll get a little bit lower than it, like we did over here. You can see it went slightly underneath, but the 20 exponential has been a very good reload all the way through this crisis recovery period. So again, 38.2, 50, 20 exponential, that seems to be most likely where you will find a lot of buying pressure if we continue to see a decline in this market. Nasdaq, very similar thing. This time the 20 is holding. The Nasdaq got very far away. We mentioned that. It hit that level that we thought it would, around that 13.5, 13.6 zone. It found resistance, sold off heavily. It's holding the 20 here on the futures. You can see what it's doing. Multiple buy zones off the 20 so far. So this is where Wall Street's going to come in if they are going to come in. But again, I alert you to things like the weekly 20. Weekly 20 has been the zone. Buying pressure coming off that. Again, if we had the bearish movement here, where's it going to go? Previous resistances acting as support, 12,400. It makes some sense, yeah? It makes sense that this would be the zone that is going to find buying pressure from the bigger market makers. So hopefully this video helps you guys. If it does, please remember to subscribe and give us a big thumbs up. And thanks very much for your support as usual. We'll see you in the next video. Bye for now.